Ever feel like when it comes to the markets, you're kind of stuck on the outside looking in?
Right.
Like there's this whole secret conversation going on, All these big players making moves. You can't even hear them.
Totally. Like a language you don't speak.
Well, today we're going to change that. We're handing you a decoder ring. The Commitments of Traders Report, the COT report. For those in the know.
Music to my ears. Love the COT report.
And we're diving deep into Stephen Breeze's The COT Bible to crack the code. This book is like the ultimate guide to this whole thing.
It really is. And the beauty of the COT report is it's like getting a peek behind the curtain on Wall Street. We get to see the actual positions of these major players, especially the commercials.
Okay, back up a sec. Commercials. You mean like...
I'm talking about the seasoned pros, the ones with skin in the game. Not just theoretical bets, but moves tied to real-world stuff.
Got it. So not your average day trader then.
Exactly. Think of it this way. Imagine a seasoned wheat farmer, right? They're not just guessing about prices, they're living it every single day.
Makes sense.
The COT report lets us track how their actions, like, say, hedging future harvests, can actually give us a heads up on potential price swings.
Yep, so we're talking about spotting trends before they hit the mainstream news. That's huge.
You got it.
But this report has been around since, what, the 1920s? It's gone through some changes, hasn't it?
Oh, absolutely. Started as this yearly thing, a once-a-year peek behind the curtain. Then it went monthly. And now we're talking weekly updates.
Wow, keeping up with the times.
Right. And that's the key. The COT report's evolution, it mirrors the markets themselves. Hedge funds, algorithmic trading, everything's faster, more complex now.
A need for speed.
Exactly. The COT report gives us this real-time pulse check on big money sentiment.
Okay, so we got to know, who are these players at the table? Who are we watching?
So you've got your commercials, our savvy veterans, right? Then you've got your large speculators, think hedge funds, big institutions, chasing the next big win.
High rollers.
And then you've got your small traders who, well, they add to the mix. Understanding what motivates each of these groups, that's key to deciphering what the COT report is really telling us.
All right, so paint me a picture. Commercials. We said they're the ones with the long game in mind.
100%. They're often taking positions that, at first glance, might seem kind of counterintuitive, like they're going against the current trend.
Real.
But here's the thing, they're often right. Imagine you're a grain merchant, right? Prices are high, everyone's chasing the rally, but you're locking in profits, selling futures because you anticipate a dip. Classic contrarian thinking.
They're playing chess while everyone else is playing checkers.
You got it.
Okay, what about the large speculators? They're the ones making the big waves, right? Big bets.
For sure. And they can amplify market moves, for better or for worse.
It's two sides of the coin.
Exactly. Remember that hedge fund, the one that bet against the housing market? Lost billions.
Ouch.
Large speculators, they can be right on the money. But when they're wrong, things can get messy.
High risk, high reward.
You got it.
And then there's the small traders. Are they even worth paying attention to?
Think of them as like the wild card. They're not moving the needle like the big fish, but they can offer like a secondary confirmation.
Okay.
If you see them suddenly piling into a trade and it's lining up with a big commercial move,
I'm listening.
that's a pattern worth noting.
Like a flock of birds suddenly changing direction. Something's up.
Exactly.
Okay, so we've got our players. But how do we actually track what they're doing? Breeze uses this term net positions. Break that down for me.
Net positions, they tell us the difference between the number of long and short contracts held by each group. It's like a tug of war, right? And the COT report, it shows us who's winning.
Okay.
So if the commercials are heavily net short in a market, it's like they're collectively betting against the trend.
So we're not just looking at if they're bullish or bearish, but like how much?
You got it. But it's not just about right now, this very minute. The real magic, it happens when we start looking for those extremes. Record highs, record lows in those net positions, especially from the commercials. That's like those flashing red lights in a movie, Something big is about to happen.
So a huge spike in commercial short positions, even in a market that seems unstoppable, that could mean a crash is coming. Like they know something we don't.
Maybe they do. And that's the beauty of the COT report. It gives us a glimpse into that world.
This is getting good. But before we go any further, I got to ask about something else Breeze talks about. The COT index. What makes it so special?
Think of the COT index like this. It takes all those raw net positions, the ones we were just talking about, and it turns them into like a standardized measure of sentiment. Instead of just a jumbled pile of puzzle pieces, the COT index starts putting those pieces together, gives you a clearer picture,
So it helps us compare apples to apples, even across different markets.
You got it. A high COT index reading, say above 70%, that might suggest a market's getting a little overheated, like a pot about to boil over.
Well,
On the other hand, a reading below 30% could be signaling an oversold market, one that's kind of primed for a bounce.
got it. So we're looking for those extremes, those moments when the COT index is practically screaming, pay attention.
Exactly.
But Breeze throws in a little cautionary tale, right? Something about a copper caper? What was that all about?
Right, the copper caper. So the COT index, it flashes this big sell signal, but the price of copper, it doesn't budge, didn't move an inch.
What happened?
Other forces at play. Booming demand from China, for one.
So even the smartest tools need context.
Always. It's like using a metal detector, right? It'll beep for a bottle cap just as easily as it will for a gold coin. You got to dig a little deeper, understand the bigger picture.
That's where the art comes in, right? Separating the fool's gold from the real deal. But let's talk about how we actually use this index. What are some practical ways to apply this knowledge?
Well, one approach a lot of traders use it is as like a trend filter. So imagine you're looking at a stock chart, you see a nice uptrend forming. The COT index is showing a bullish bias from the commercials. Well, that's like getting a green light. Adds an extra layer of confidence to your analysis.
So it's not about blindly following the COT index, but using it to confirm what you're already seeing.
Exactly. Now, for the more adventurous types, there's contrarian trading. This is where you're looking for those extreme readings we were just talking about and basically taking the opposite side of the commercial's bets.
Whoa, so if the COT index is flashing red, signaling an overbought market, a contrarian trader might actually consider shorting it, betting that the commercials are about to trigger a downturn.
You got it. Higher risk, potentially higher reward, but definitely not for the faint of heart.
Talk about going against the grain. But hey, sometimes the biggest rewards come from zigging when everyone else is zagging. Breeze really emphasizes analyzing those net positions, especially the ones held by commercials. Why are those commercial positions so insightful?
Remember, commercials are the ultimate insiders. They're not just playing with money, they're managing real-world risks every single day. Think about a cocoa processor, right? They need to buy cocoa beans to make chocolate.
Makes sense.
Their hedging activities, which we see reflected in those net positions, can give us this amazing glimpse into their expectations for future supply and demand.
So if they're heavily net long on cocoa, that could suggest they're anticipating a shortage, potentially driving prices higher.
You got it. It's like having a direct line to the factory floor, We get to see what the people who are actually producing and consuming these commodities are doing, not just what some talking head on TV is saying.
I like it. Okay, so we're looking at those net positions, especially from the commercials, to get clues about future price moves. And we got to watch out for those extreme readings, those COT climaxes that can signal some major turning points. What are some of the telltale signs of a COT climax besides just the sheer size of the move?
Great question. One telltale sign is the speed of the move. A COT climax, it's not a leisurely stroll, it's a sprint. We're looking for those sudden, dramatic shifts in those net positions, often accompanied by this spike in open interest, like everyone's rushing for the exits all at once, or piling into a theater,
Everyone wants a seat.
Exactly. Another telltale sign is divergence from the prevailing trend. Let's say the market's been on this steady climb upwards, right? But suddenly the commercial net positions, they start plunging. Even as prices continue to rise, that's a red flag, like the calm before the storm.
So we're looking for those moments when the commercials are zigging while the rest of the market is zagging.
Yeah.
Those moments when they're breaking away from the herd.
You got it. Now, it's important to remember, not all COT climaxes are created equal.
Of course not.
Their significance can vary, depends on the market, the overall context.
Right, we can't just blindly follow any signal. We got to use our judgment, look for confirmation from other sources.
Absolutely. The COT report is a powerful tool, no doubt, but it's not a magic bullet. It takes skill, experience, a good understanding of the markets to really use it effectively.
Speaking of skill and experience, you spent years studying this thing, right? Analyzing charts, developing trading strategies. What are some of the key lessons you've learned along the way? What advice would you give to someone just starting out with COT analysis?
One of the biggest lessons, and this is tough, especially when you're starting out, is patience. The COT report, it's a long-term indicator. It's not about trying to catch every little wiggle in the market. We're looking for those big, sweeping shifts in sentiment.
Got it.
The kind of moves that can lead to major, long-term trend changes.
So it's more about playing the long game, waiting for those high probability setups.
Exactly. Another important lesson, and this is true for any kind of analysis, is be skeptical. Don't just blindly follow any single indicator, even the COT index. Always cross-reference, look for confirmation from other sources, be prepared to adjust your strategy as needed.
So be a thinker, not just a follower.
100%. Don't be afraid to experiment either. The COT report, it can be used in so many different ways. What works for one trader might not work for another. It's about finding what works for you, your trading style, your risk tolerance.
Makes sense.
Now, remember how we were talking about the COT report mirroring the evolution of the markets? Nowhere is that more evident than in the currency markets.
Ah, yes, the Wild West of trading. Fast-paced, influenced by everything under the sun. How does the COT report bring any clarity to that chaos?
These markets are heavily influenced by global events. Things change at the drop of a hat. The COT report helps us cut through the noise.
So it's like a finger on the pulse of global capital. What kind of insights can we get specifically from the COT data for currencies like the euro, the yen?
Well, the interesting thing about currencies is they trade in pairs, right? One currency's strength is inherently linked to another one's weakness. Large speculators, they love this volatility, but their quick moves, that can actually be our early warning system.
So if we see hedge funds piling into the yen, driving that COT index to an extreme, that could be a sign that the trend is about to reverse.
Exactly. But there's a catch. The COT report, it's US dollar centric.
Okay.
So if you want to trade, say, the euro against the British pound.
Right, a cross rate.
Exactly. You need a workaround. Breeze calls it the pseudo COT. We take that individual COT data for each currency in the pair, in your example, the euro and the pound, and we apply a formula to create like a synthetic COT report for that cross rate.
So we're basically reverse engineering the COT report to get those insights into pairs that aren't directly covered.
That's pretty clever. Right.
But enough about currencies. What about stock indexes? Can the COT report be useful there too?
It can, with a caveat. Stock indexes, like the S&P 500, they're not physical goods, right? Like wheat or oil. They reflect investor sentiment about the broader economy. So while commercials still participate, their reasons for being long or short, they can be more nuanced.
So it's not just about supply and demand, but broader economic factors at play.
Exactly. If we see commercials getting increasingly bearish on the S&P 500, it might not just be about valuations. It could signal concerns about upcoming earnings reports or even a potential recession.
Okay, so it's like this whole other layer of analysis, another piece of the puzzle when you're trying to decipher the market's movement.
Precisely. Now, shifting gears a bit, what about precious metals? Gold, silver. Historically, they're seen as hedges against inflation, uncertainty, safe havens. How does the COT report play into those markets?
Yeah, it's about tracking those flight to safety flows.
Yeah.
When the world gets nervous, money tends to flow into those assets, driving up the price, right? Can we see that in the COT?
Exactly. The COT report can help us anticipate those moves.
So if we see commercials suddenly getting bullish on gold, even if the broader market seems calm, that could be a sign that trouble's brewing.
Like the piano player suddenly stopping in those old Western movies, you know. You just know a showdown's coming.
Love that analogy. Speaking of showdowns, what about the energy market? Always a hotbed of activity. What insights can we glean from the COT data for commodities like crude oil?
The energy market, man, it's fascinating, influenced by like a million different factors. OPEC decisions, geopolitical tensions, global demand.
Right.
The COT report can really help us untangle that web, especially when it comes to understanding the actions of the major oil producers.
So if we see major oil producers heavily hedging their future production by selling oil futures, that could signal they're expecting lower prices down the line.
Exactly. And that can have a ripple effect on everything. Gasoline prices, the stock market.
It's all connected.
Yeah.
So the COT report, it can really help us understand that interplay of supply, demand, and market sentiment in the energy market. Super useful. But let's move on to something a little closer to home, maybe even to our stomachs. Agricultural commodities. What insights can the COT report offer when it comes to things like grains, livestock, all those agricultural products?
The agricultural markets, they're unique. Why? Because they're heavily influenced by good old Mother Nature. Weather patterns, droughts, floods, these can all have a massive impact on supply and demand. And guess who's on the front lines of those risks?
The commercials. the farmers, the grain merchants. They're the ones living and breathing these markets every single day.
Exactly. And their actions in the futures markets, reflected in that COT data, can give us invaluable insights into what they expect for future harvests, livestock supplies, ultimately how prices are going to move.
So if we see a big grain merchant, someone like Cargill, aggressively buying wheat futures, it could be a sign that they're anticipating a smaller harvest, maybe due to a drought.
Could be. Or maybe they're seeing increased demand from big importers, signaling a potential price surge.
Right, always multiple factors at play.
Yeah.
But the COT report, it helps us narrow down those possibilities.
Exactly. It helps us make more informed decisions.
Love it. Okay, let's get a little more technical for a moment. Breeze talks about something called the gold-silver ratio. How can we use the COT data to analyze this ratio? Can we use it to actually profit from its movements? You know, it just occurs to me, we've been talking about the COT report, like it's this tool for understanding individual markets, right? Like, will the price of oil go up? Will the price of gold go down? But could it, I don't know, tell us something bigger about the whole economy?
Wow, yeah. You're thinking on another level here, and it's a good question because the COT report doesn't exist in a vacuum.
Right.
The decisions these big players are making, especially our savvy commercials, they're often based on their outlook for the entire economy.
So it's not just about whether, like, the price of corn is going up or down, but what that might tell us about, like, where the global economy is headed.
Exactly. Let's say, hypothetically, commercials across all these different commodity markets, metals, energy, agriculture, they're all suddenly increasing their net long positions at the same time. That's a signal worth paying attention to.
Okay, what would that kind of synchronized move be telling us?
It could be suggesting that these industry insiders, the ones who really know their stuff, they're anticipating a period of economic growth. They're basically placing their bets on increased demand across the board.
So the COT report could be like this early warning system for the economy, giving us a glimpse of what these major players are expecting down the line.
It's a fascinating idea, right? Think of it like this. If a big manufacturer, they start seeing a surge in orders for raw materials, that might be a sign that the economy is picking up, right?
Mm-hmm.
The COT report is like we get to see that happening in real time, but across multiple sectors.
That's wild, but we can't just rely on the COT report alone, right? We still got to look at other economic indicators too.
Of course.
Yeah.
Interest rates, inflation, consumer confidence, you name it, all part of the puzzle. But the COT report, it's like adding another layer of like high definition color. Gives us this whole other perspective.
It's like we're getting to sit in on a secret meeting of the people who really know what's going on.
That's a great way to put it. But remember, no single tool is perfect. There are going to be times when the COT report throws us a curveball, gives us a false signal. But by combining it with other forms of analysis, by understanding its strengths, its limitations, we become much more informed.
This has been a real eye-opener. I feel like we've just scratched the surface of what the COT report can do. It's definitely not just for traders. It's a valuable tool for anyone who's trying to make sense of the world, really.
100%. The COT report, it's a testament to the power of information. When we learn how to decode it, we empower ourselves to make better decisions, whether we're in the markets or just living our lives.
Beautifully said.
Oh.
And as always, we wouldn't want to leave you hanging without a little homework assignment. So, to all our listeners out there, pick a market that interests you. It could be anything.
Yeah.
Coffee, copper, the Canadian dollar, whatever, and start tracking the COT data. See what you can uncover.
And don't be afraid to go deep. Challenge your assumptions. Keep learning. The beauty of the markets and the COT report is that there's always something new to discover.
Couldn't have said it better myself. So until next time, everyone, stay curious, stay informed, and happy trading.